What's up, guys? It's Andy here. Welcome back to another episode of the Andy Kandola Show. So today I got three topics that I want to run through. What is going on with the economy? We are basically looking at a V-shaped recovery. So I'm going to run through that and go through some of the things as far as why I think we are going through a V-shaped recovery. And is this going to last, or are we going to see another market crash? Now, additionally, I do want to go ahead and share with you guys my portfolio and show you guys where I'm at with my current portfolio. And finally, I'm going to go through 5 stocks that I do believe are recession proof that I've been buying into on a weekly basis that I believe will go through any type of recession, even if we have another second wave of this virus, or if we have a second downturn in the stock market, that these 5 stocks are safe stocks to go ahead and invest in long term. So let's go ahead and jump right into it. Now I want to go ahead and run through my portfolio first and share with you guys some of the things that I've been doing with my current portfolio. Now the portfolio is sitting at $24,753 at this point. I am up $333 in the last day. In the last week, I am up $868. The last month, the portfolio is up $1,230, and then in the last year, the portfolio is up $1,363. Now, additionally, in this portfolio, I only carry dividend stocks. If you are new to my channel, my strategy with this portfolio is basically to carry dividend-based stocks and build another source of passive income. This is a long-term strategy for me. I'm not looking to invest in any stocks that do not pay out a dividend because I do want to build a passive income. But also I do look at the growth of the company, as I want these companies to grow as well over the long term. Now, as far as the stocks that I've been purchasing, I'm actually placing an order for 10 trades today, and these 10 trades I'm going to show you guys right here. I'm basically going to be investing $760 today, and I'm investing in these 10 companies. Now, I do have a link down in the description for my full portfolio, but I am adding 3 new positions to my portfolio at this point because these stocks I've been watching for a period of time at this point, and I'm just going to go ahead and pull the trigger and go ahead and start diversifying myself in these 3 stocks. So I'll run through that real quick here as well. But as far as the stocks that I'm buying PPL Corporation, investing $50 into that. That's a utility company. They do pay out a pretty solid dividend. I believe their dividend is right around 5.5%. Realty Income is my favorite REIT. They do invest in commercial real estate, and they have commercial tenants like Walmart's, Walgreens, 7-Eleven, Sam's Club. So it is one of my favorite REITs that I do invest in on a weekly basis. AT&T is another solid one that does pay out a nice dividend, and so is Verizon. So in my telecommunication, these are my 2 favorite companies. Main Street Capital is a BDC. Basically, they're a business development company, and they invest in mid-cap companies. So if those companies are looking for a loan, or if they're looking for an equity, Main Street Capital will go ahead and provide equity and become a shareholder, or they'll go ahead and lend out money, and then they'll get paid interest back on that money. Abby is another solid company in the healthcare sector that I'm investing in as well, and they do pay out a nice dividend. So as you can tell, I'm focused on investing in higher dividend stocks right now because the stock market's just going up. I'm trying to go ahead and take advantage of the high yield dividend on these stocks. Now, additionally, I do have a couple new stocks that I'm going to go ahead and add into this portfolio, and that's going to be Bank of America. Now, Bank of America is a stock that I've been watching for a little while now, and I just decided to go ahead and add that into my financial sector. Additionally, I do invest in Apple basically on a weekly or bi-weekly basis. And then the other 2 stocks that I'm adding new to my portfolio is going to be Costco. Now, Costco is a company that I've been watching for a long term, and they've shown some solid growth in the last 5 years. This company's grown by over 100% in the last 5 years, and long term, they are a wholesale company, and I don't see them going anywhere but up. And then lastly, this was a little bit of a risk, but Altria Group I did go ahead and add into my portfolio as well. Now, Altria Group is a high dividend yield stock. Currently, they're paying around an 8.5% dividend yield, but let me go ahead and look at that real quick here. So with Altria Group, they're paying around an 8.6% dividend yield. Now, they've been paying out a dividend for the last 50 years. So that's extremely solid. This is considered a dividend king. And basically any company that has been paying a dividend yield for at least 50 years is considered a dividend king. So altogether, I did go ahead and decide to invest in this company. So these are the 10 stocks that I am buying today and for this week. So I just wanted to go ahead and share that with you guys here as far as giving my portfolio update. Now, additionally, I did have some dividends that were paid out to me in the last week. So I just want to share that here as well. Now, I got dividends paid out from Bank of Montreal. I also had dividends paid out from Starbucks for 56 cents, Royal Bank of Canada for $1.28, Realty Income Corporation for $4.77, Procter & Gamble for 66 cents, and then Apple for $3.72. So it is extremely exciting to see dividends being paid out just for investing in a company. And long term, I just want to grow this portfolio so there's more and more dividends being paid out. But now that's basically everything that's going on in my portfolio at this point here. Now, additionally, I want to go ahead and jump into the 5 recession-proof stocks that I do believe are going to be the safest stocks to invest in, even if the stock market goes down. These are going to be stocks that you can hold on to, and I see a potential for growth within these companies. Plus, they all are going to pay out a dividend. And the first stock is going to be Apple. Now, Apple is a growth company basically within the technology sector, and they're basically one of the largest companies when it comes to market cap. Their market cap overall is $1.37 trillion. Now, Apple is also a growth company, and they've been growing for the last year. And if we look here, they've actually grown by 78% just in the last year. And year to date, while we are in this pandemic, this company has actually grown by 8.33%. Now, just in the last week, this company looks like they are down, but because technology sector was not really impacted as much as some of the other sectors, this company was growing at the same time. Now, additionally, with Apple, they are basically recession proof because long term, once you start using any type of device that's Apple based, they basically suck you into their ecosystem. Now, Apple, I personally like because they do pay out a dividend as well. Their dividend right now is right around 1%. It's 1.03% here. And additionally, Apple just started paying their dividends in the last 7 years. So they are on a dividend growth streak for 7 years as well. So they've been growing their dividends every single year, and they're growing at right around 10% per year. Okay, now let's go ahead and jump into the next company. The second company that I do believe is recession proof and that's also been growing during this pandemic is going to be NVIDIA. Now, NVIDIA is basically a video games processor company, and they make semiconductors, and one of their known processors is actually called the GeForce. Now, NVIDIA has some of the most popular games out there. One of the games that they own is called Minecraft. Another one is called Fortnite. Now, these are the top 2 games in the world at this point. Now, this company is also working in the technology sector with companies like Tesla, and they're basically the industry leader when it comes to artificial intelligence as well. Now, if we look at NVIDIA, in the last year, this company has actually grown by 145%, and just year to date, this company has grown by almost 45%. So this company is growing at the same time some of these other companies are not rebounding. And if we just look at the last 3 months here, NVIDIA's stock price has been slowly climbing as well. Now, additionally, with NVIDIA, I do like that they do pay out a dividend as well. Now, their dividend is extremely low at 0.19%, but because this is a growth play and because this company is growing and using a lot of their funds to grow, I do see them increasing their dividends over time. Now, NVIDIA started paying their dividends in the last 7 years as well, so they've been growing their dividends every year since the last 7 years. Plus, they're growing their dividends at a pretty high pace at 13.49%. Okay, now just moving along to the next stock that's going to be recession proof that I also believe can be invested in long term is going to be Home Depot. Now, Home Depot is a consumer discretionary. Basically, they sell home improvement products. Now, with Home Depot, in the last 3 months, the stock, same exact thing. While we are in the middle of this market crash and we're still recovering and some of the other stocks are still recovering, Home Depot recovered the quickest. Now, Home Depot has grown in the last year by 29%. Plus, if we look year to date, they've actually grown by 13%. So this stock has been growing at a pretty steady pace. Now, additionally, with Home Depot, they do pay out a dividend of 2.43%, plus their dividend growth is 23%, which is an extremely high dividend growth, and this company has been consecutively paying their dividends and growing their dividends for the last 11 years. But next, let's go ahead and jump into the healthcare sector. Now, the fourth company that is recession proof that I'm investing in basically on a weekly basis is Johnson & Johnson. Now, Johnson & Johnson is basically the industry leader when it comes down to healthcare, and they own a lot of essential products that basically every household has. Companies like Tylenol, Benadryl, Motrin, these are just some of the products that they actually have within their product line. Now, additionally, with Johnson & Johnson, they've grown by roughly 9% in the last 1 year, and year to date, they're break even. Now, this company is a very safe and conservative company long term to invest in, and with Johnson & Johnson, they are actually considered a dividend king, meaning that they've been paying out a dividend for at least the last 50 years. So if we look here, Johnson & Johnson has actually been paying a dividend for the last 57 years. Plus, their dividend yield is 2.79%, so they do have quite a decent dividend yield, and their dividend growth rate is 6.32%. And then the fifth stock that we have is Microsoft. Now, Microsoft is basically the leader when it comes down to the technology sector. Now, with Microsoft, this is another growth company that does pay out a solid dividend as well, and they're basically the cream of the crop when it comes down to technology. Now, if we look at the performance for the last 1 year, they've grown by 44%, and if we look at their performance for a year to date, they've grown by 15%. And if we just look at their stock price for the last 3 months, Microsoft is another stock that's just been consistently growing. So for the technology sector, this is another great investment to invest in long term. That's going to be a bit safer. Now, additionally, Microsoft does pay out a dividend as well. Their dividend is 1.12%, and they've been growing their dividends by 10% every single year for the last 5 years, and the dividend growth is 16 years. So they've been growing their dividends for the last 16 years. So these are going to be the 5 stock guys that I believe that will grow long term. Now, next, I want to go ahead and look at this V-shaped recovery that we're looking at this point, and go ahead and share with you guys my opinion in regards to what I believe is going to happen. But before I do that, I do want to share with you guys a video. Now, this video is going to be from Mark Zandi, who is basically an economist at Moody's Corporation, and Moody's Corporation is actually a stock that I invest in myself, but they are basically a credit rating agency. So this is going to be a good video and a good take to get his take on what he believes is going on in the economy. And now let's go ahead and jump into the video.
Chief economist at Moody's Analytics. Okay, so what's your view of how long it's going to take the economy to fully recover? You know, are we looking at a V, a U, a W? We've heard all of these letters to try to describe what the rebound could look like. Where do you stand?
The damage to the economy already has been too significant. There's going to be too many business failures. Even as businesses reopen, a lot won't. And so many of the people who've lost their jobs won't be able to get back to work. So there's no way this is going to be a V. If we do get a vaccine or an effective therapy, at that point in time, we'll start to kick back into gear. But even then, it's going to be a bit of a slog, because this is doing a lot of long-term damage, you know, to our fiscal health, to the process of globalization. It has all kinds of implications that I think we're only now starting to get our minds around. So I don't think we get back to anything we would consider to be normal until perhaps mid-decade at earliest.
How is the stock market going up so much, and why is Wall Street looking pretty good while Main Street and while the economy is really struggling?
Well, I think the market's taking a lot of solace in the response by the Federal Reserve and other central banks to the crisis. I mean, the Fed is all in. They're going to do everything they need to do. So if you're a stock investor listening to that, that's a signal that there's a limit to your downside, that there is a floor under stock prices. But I do think, having said that, stock investors have gotten ahead of themselves. They're putting too high a probability on a V-shaped recovery. And once it becomes obvious that that's not the case, once they actually see the bad corporate earnings, the defaults, the delinquencies, the business failures and bankruptcies, once that is no longer a forecast, but that's a reality, I think we're going to see another leg down in equity prices. I don't think the script on this bear market has been written yet.
So now, to Mark Zandi's point, the stock is basically projecting the future is better than the past. Now, it's not calculating in anything that can happen bad in the economy. It's basically saying that, hey, the economy is recovered at this point and we're only going to see higher and higher potential. Now, here's the thing, guys. My thought with this is similar to what Mark Zandi said. I believe that the stock market can go down, and more than likely, we will basically be in a stock market bubble where it'll just be oversaturated and it'll end up just crashing on its own, because we're not calculating a lot of things that can happen. Now, Dr. Anthony Fauci has also said that we might get a second wave of this virus, and if that happens, then understand that we are 100% going into another market crash, and at that point we might actually go into a depression. So the stock market is really not calculating some of the things on the downside that can happen, and basically everybody wants to take advantage of the low prices in the stock market. So I do believe that it's just causing inflation on its own. Now, additionally, people are thinking that the vaccine is going to be coming sometime by this year, and my take on that is I don't think the vaccine is going to be coming until at least sometime in 2021. So there is still going to be a lot of things that are going to be happening in the economy, and because the economy and the stock market are just not on the same pace, the stock market is going up while the economy and businesses are still shut down or their profits have been cut in half. So I do believe in the second quarter and the third quarter of this year we will see the stock market go down again, because when the earnings come out for some of these bigger companies, the stock market is going to go ahead and realize that, hey, the earnings are half of what they should have been, and the stock market will go down at that point. So there is a lot of uncertainty in the stock market. Now, if you are investing in the stock market, my strategy is always to go ahead and dollar cost average, because with dollar cost averaging in the stock market, you can go ahead and take advantage of any profits, and you can take advantage of any downtrends or uptrends in the market, so you're not losing out and you're not just waiting on the sidelines for the market to go down, because at the same time it's very unpredictable to know what exactly the market's going to do, and it usually tends to do the opposite of what we want the market to do. So guys, that is going to basically be my take on what I think is happening in the stock market at this point, and hopefully you guys enjoyed the 5 stocks that I do believe are recession proof. Now, these stocks I obviously invest in myself, but if you want to have a look at all my stocks, I do have a link down in the description, and if you are interested in signing up with M1 Finance, I do have a link down below where you do get $10 free to sign up with M1 Finance, and as an affiliate it does help me out as well, where I also do get $10 from that as well. And lastly, if you have any questions or comments, make sure to leave them down in the comments below, and of course if you like content like this, make sure to subscribe to the channel, and if you don't mind hitting that like button, as that would truly be honestly appreciated. But thank you guys for watching this video. I'll see you guys at the next one.